Is there a game today? Yeah, there's a game today. Everyone should be happy. Saquon Barkley, the best player in the world, gets to touch the football tonight, 8:20 on NBC. It's going to be fun against Dallas Cowboys. They're hanging up a banner. They won the championship last year. I'm glad we talked about Saquon and the Eagles as much as we did because we could obviously tell how good they were early on. And I think it's going to continue. And it's similar with the market. The market, wow, today making some big moves behind a big move in XLY. Jobs, you saw what happened this morning with the jobs number, I think worse since the pandemic through ADP and all these different numbers. And you saw retail and Amazon rip. It looks like the Fed is going to indeed cut next week, and we'll see how the market is reacting. Let's first get to the doc. Give me a sec. I'm very excited for the program tonight. I hope you do watch. It's going to be a lot of fun. Football, probably the best thing about fall. I keep saying it. Let's go to the probably help if I screen share. All right. Boom. All right. So trading trends today. Let's see how we recap the day. Consumer discretionary jumped 2% behind Amazon's monster 4% rally. Home builders, let's take a look at the homies. We haven't looked at that chart in a little while. They added 3% today. China, a big fall today, down 2%. And the copper miners also fell 2%. We'll take a look at both of those charts. China has been really a gapper up or gapper lower. I've been waking up and you see PDD, BABA, XBEV. You either see them jump up a couple of percent or jump down or fall down a couple of percent each morning. So China volatility is there. We'll take a look if there's any setups. Then, new all-time highs. There's a brewski. It's game day. New all-time highs for XLC today. Meta and Google continue to go. The mags hit all-time highs. Canada, new all-time highs, as well as my baby, the best fund in the entire marketplace. The top 50, the extra large XLG, new all-time high. That machine continues to run as a stallion does. So let's get into the chart here. Again, we are about 4 hours away from kickoff from Lincoln Financial Field. All right. Let's screen share. I hope there's even like the Italians or my Italian friend, you know how I get for football. All right, so here we go. Intraday tape. Look at this. First off, the moves. SPY up 80, Q's up 90. Tesla added 1. Amazon on Monster Day we alluded to 4 1/3%. Meta up 1.5%. CRM, Salesforce, the dog that it is, down 5%. One of the probably the worst stock that's heavily traded in the entire marketplace of such a major market cap. Totally a different evolution from for that company and what their future is going to be after how other firms use AI and they're at enterprise level with OpenAI and Google Gemini, etc. IWM a monster day, up 1.25%. Broadcom up 1.25%. And Netflix a monster, up 2.5%. Stock looks absolutely incredible. Intraday tape, here we go on the open. Really a nice move all day, and it started getting a little bit of fervor here when we started putting a floor at $645 in SPY at 11 a.m. It's when we first entered overbought behavior, and then it took a little bit of a breather just until about that European close or 1 o'clock here on the East Coast. And look at this, green bars and basically more green bars, bigger volume into the end of the day. And this basically looks like what Saquon Barkley is going to do later at the end of the as soon as the first quarter begins, and it went and straight and away. And it reminds me of the Rams game, my favorite play in Eagles history, when he was doing the crash out on the helmet in the snow. That's what this market looked like, this breakaway from 1 o'clock onwards. We accumulate from 646 to 649. So not major, it was $3 or about about what is that, 40 bips or so, but a nice move. Came very, very, very close to all-time highs. My provider actually, it had it within a nickel for SPY here. I don't think it made it, but we'll see what happens after hours and how we open tomorrow. As I zoom out here, apologies, my computer thinks kickoff happened a little bit early, but I think someone would have told me. So as we said before, this market is very bullish. I was saying that the levels to me are very clean, that we're going to hug and straddle 640 for quite some time. And to the upside, looks like the market may want to get pulled up to about 651, 53, right around that area. We got 649 today. I still have that same belief. I still think the market has to digest some of these gains, although the flows have been terrific. I love seeing that action from 3:30 to 4. We've been seeing it for several weeks, honestly, for several months now, since May. You can look at that measured intake and money flow on intraday chart, and other options flow, in terms of upside calls. So in terms of SPY, in terms of downside, if we get an ugly sell-off, a tweet here or something like that, that's probably going to take you to about 628, 630, and they are going to jump in and buy that. So, and again, 630, just so we know, is uncharted territory. We first got that in human history, July 22nd, and I don't think the market's going to go below that in this next correction in the next 2 weeks. So I think it's a Japanese proverb. It's like wiser to get off the train now instead of just staying on, because it's going to cost you more in experience and time and all that. That's kind of like the way the market is. Get in at 642 if you're able in the next 2 weeks, and then you probably help get that ride to about 655 in the next 2 weekish time frame. Okay, let's see some of the spaces that moved. They were monster Saquon-like, and that is really saying a lot. XLY with a monster move here today, up 2%. That's big for an XLY, and you saw why, because Amazon had a huge day, up 4%. This had 1.8%. As I said, here's the chart. This is basically, if you don't know XLY, the way it's comprised, it is the Amazon, Tesla, Home Depot fund. It's like more, I think that's more than 50, 60% of the fund. Good looking chart here. Pretty scary moment, I would say, from March 10th to about May 12th here. So this definitely had 2 months in purgatory, coincided with the U.S. SPY 52-week low here on April the 7th. Of course, if you, the economy 70% consumer. So this is, the market essentially on steroids, when you can try to trade the market of stocks or the stock market. XLY comes to mind. It peaked December 18th last year when the Fed cut at $240, and we troughed, like I said, on April 7th at 173. You have a rising 200-day moving average, which is your near-term support at 216. And just a nice day, up 1.8%. This is emblematic to me, like I said, of the broader market. I wouldn't want to chase this right here for the next 2 weeks. I would rather get in at around 229 to 230. I think you get your chance, and then I would participate there. And I like the exposure to Tesla and obviously the mega cap tech. In here you have Amazon, and then you get a little bit of Home Depot if things look great. Fed cuts, you get a move like you did today. Next, let's go a little bit more focused in. XRT, a multiple standard deviation move, which is why we're looking at it. Again, no one's hiring. Worst job number since the pandemic 4 years ago. Let's go to Dollar Tree and to Amazon to buy stuff is the logic. I'm half serious, half joking. But XRT up 2.6%, very close to a 52-week high, hit 87.15. Then we got very, very close, closed near the highs today. Very, very good looking chart. Like I said, of XLY, you could see similar purgatory. We said then last one from March to May. This was a little bit more extended. This is February to May, with also the same low April 8th. So, within 48 hours of the other one, XLY and SPY. This I like in terms of XRT. I think this has done a good job. It has a less, obviously, an ascent of an ATR, average true range, or volatile stock, than XLY. Less exposure to straight, mega cap tech like Amazon directly, and Tesla, obviously, and on XRT. But I like this one. I think this is setting up right here around $84. I wouldn't do it here at 87. Full target for me is right around 87 quarter. So I think it's getting very close to. I don't think it's going to have a multiple Bollinger Band close, even with expansion here. So I'm bullish, but I would love a setup. And I think you get it in the next week or so with some zigs and zags. I do think this gets an 84 handle, ideally 84 even. You get in there, and then the target of 87. But yeah, it did this whole move. When I just am targeting, it did the whole thing from the 2nd to the 4th. Did the whole thing in 2 days. So we'll see. I think it zigs and zags before it goes through new highs. XRT, a big move today, up 2.6%. And then the next move, we have not looked at this in a while, and it's an important space. The homies, the home builders, up 3.2%, let's say. And this has had, like I said, you looked at the purgatories for consumer discretionary and retail, 2 months there, 3 months. Look at this one, December, and my purgatory definition is how much time you spent under a 200-day moving average. Is December oh, Jiminy Christmas, all the way to about August. So this was like an 8 month in the penalty box, and now it's just having its 1 month celebration party. So what says we of it now, Mr. Yingling? So I like this one. This was very similar to the XRT in terms of the setup. Yeah, in terms of setup, obviously the charts are very different. I like your risk here at 112 to 113 entry, targeting right around that 113 even, but full, target upside right around 118 half. So I don't love chasing it right here. A nice day up $3.50. But you had, many chances going back to August 13th to buy this at 113. I'm not so sure the train has left the station immediately. So I think you get a couple zigs and zags. When the market takes a breather, they will take a foot off the gas, foot off the gas in a space like home builders. But really good trading. Another thing, above 50 RSI trading since June 20th. So it's really, if you inverse that, it's really working hard. And look at the gravity inverse of the 200 moving average is sliding lower, and look at the chart here in terms of the price action sliding higher. So those will reach an equilibrium, and it is carving out a nice base. As long as that 104 holds longer term too, I think it's a place to be in. I would wait for the 113 entry and have a 118 half target near term. Those are the big movers today. Let me sippy me sippy. Let's look at the movers lower. There were a few, really just two spots. China and the copper miners. China through the form of ASHR. Not a lot of people know about this fund, but it does trade in decent size. It has different, obviously components versus FXI. But this is China, the A class. It peaked on October 7th of last year with the Xi news of the, all the stimulus. And here, why are we talking about it today? Down 2%, a big move lower. Looks like kind of a clear top here on the 29th of August at 32 even. And now, boom, 30.88 in the stock. Now, what do we say for China? A great looking chart, obviously, with the rise of 200 moving average. I think this is still going to continue to go wayward. I don't want to play this one for about maybe about 2 weeks. Let it take a breather. And then I think it's going to be a good entry at about right about, 30, 35, 30, 50, which is your 21-day exponential moving average, I think is a good price. So about 1% lower from here, but give it time to also digest in terms of 2 weeks. And again, in terms of above 50 RSI trading, this thing almost looks rigged from the People's Republic of China. I should probably watch my door. But this thing has held 50 RSI trading since April 21st. Really beautiful technically too, above the 200-day moving average, starts to rise, and that's the last time it went below 49.9 RSI. So really, really nice trading in terms of price action spot. That was when it was at $26 and a nice steady rise to 32. I say you wait for it to come in for about 2 weeks. And then, like I said, you probably get in around 30 even, hopefully 30 handle even. And then maybe you do a 30, 32 half call spread going out to December, see if that's liquid. Maybe you translate that and you do it into FXI if it's not liquid, which I don't imagine it to be in the A-share. Next mover lower, when the jobs are not moving on, China, for that reason, they also had numbers overnight, suffered down 2%, but the copper miners, in terms of global growth story, this is coming off of a 52-week high yesterday. Copper miners, a very attractive space. This thing was like a trampoline coming off of Memorial Day at $41, and boom, all the way to $51 yesterday. A beautiful chart. Going back as well, the all-time highs is back in 2011. You got about 14 years. It was $61. So there's some overhead for COPX. That's a great thing when you about time frame, zoom out. These things have room to go. That's why people have different kinds of catch-up trades. It's saying how much time you have left in your game, first quarter, second quarter, etc. Saquon runs through it all, obviously. God, I can't wait to see what he's going to do today. I love him. All right, COPX, this has a beautiful flows as well. It reminds me of the market since the end of April. Great flows. I personally wouldn't just chase this up here. I don't see it getting so far extended away from the moving averages here, specifically the 21-day exponential by more than 1.25%. And it's doing that here, even with lift, even with an RSI of 71. So love the chart. Definitely, I'm not going to poo-poo on it, but I would give this about 2 weeks as well. I'm getting a lot of similar reads from charts. Let it come into you. I would tell you, if to be aggressive and go into okay low and, roll 60 delta calls or something. But right now it looks like a lot of stuff has, kind of peaked, and I think it's going to have to digest. The other thing, though, really fast, last thing on this, give it 2 weeks, and I do think this one gets to about 47.5, and then that will be a beautiful entry, in my opinion. Then you can start looking at those 47, 51 call spreads, probably even, maybe even like in November, you have to see what contract is listed. Again, also the Fed is, going to do their thing soon. So obviously there's catalyst in the market coming up soonish. All right, let's see how we're doing here. Top 3 gainers the past 5 days. Oh yeah. Will not have a recap video tomorrow. That is today's edition. So we will go through year-over-year leaders in ETF land. So I'm doing the week wrap-up right here, right now, at the end of the program. Top 3 gainers of the past 5 days. Natural gas up 7.5% over the past 5 days. Today added 30 bips. It looks like it kind of peaked here, but we had talked about, when Chris had asked us, we're here on the 52-week low. I think it was on August 26th. It was at the bottom. You see the RSI, not even oversold. It's actually 34 RSI. So you get a divergence there. And then right there, you immediately see that it could ping pong the other way. And immediately I say, oh, this could probably get to 1275. And it does 3 sessions later. And now here we are, 1310. And it's having the best week of any ETF, up 7.5%. I'm talking about 1X, not, all these cracked out yield max nonsense. So I think the run, that was, so I'm doing a time series as well on this, going back August 26th. My bullishness for this would end max September the 10th. So I see maybe a little more zigs and zags, but with a ceiling at right about 1365. So maybe there's a little bit more juice in the trade. If you really want to be super tactical about it. But maybe a couple percent, 4% more upside. But again, this super heavy 200-day moving average, 1674. Again, this is the ETF, not the futures. I know they have different. It's not exactly the same in terms of it peaked in March and it bottomed, last November, or it bottomed in August. They do trade a little bit differently. But I think that was the run. Maybe, like I said, another week or so as it tries to carve in that base around, put in a floor around 12 half-ish. And then after that, let's see. I see a little bit of downward movement to about, 1180. I'm not so sure the 52-week lows are done with it. I think that might have been the gross bear cat bounce in this. I'm not so sure. It is impressive to see it go above 50 RSI. That's a pretty hard bounce from 1190 all the way to 1310 in percent terms. I think it's getting a little bit done, in my opinion. The next step would be super impressive if it gets above the 50-day moving average, which is 1378 or 60 cents away. I don't think it's going to do. I don't want to see that to hold at least a week, and then I'll say, oh, maybe it does get to $16, $17. But I wouldn't, exactly load up calls or anything. I think it maybe has another week of bullish momentum, and then it starts to go lower. All that being said, and you can see these 2 days of digesting, but the best 5 days for any ETF belongs to this UNG. I'm not going to poo-poo on you. Congrats, 7.5%. Next one is an actual superstar, the Gold Miner Juniors, numbered second best week after that junk nat gas. 52-week high, not all-time high. This has room to go. This was just yesterday. This thing hit basically $85, and now it went down 1.3%. I tout this thing, and when it sets up and it moves. This has been really, I know right here it's overbought for just a handful of days, but this has really had some beautiful trading action since about August the 7th. I would wait for this to come in to about 76 even. You'd have to be patient. I think it takes about 2-ish weeks or so. It is literally overbought right here at 74 RSI. It's going to test your patience. It's going to almost be like, waiting for a Saquon negative carry. It's just not going to. It's just not going to materialize. So, but over 2-ish weeks or so, I do think you get a pullback to about 76, and I'm going to pound the table and say, get on board. Second best week belonged to that one. GDXJ up 6.5%. And the third one, I try to keep these non-correlated, but sometimes when I'm looking for alpha and you're looking for gains, you got to tilt the scales. And the third best week, it was all the same spot. It was in commodities, and it was in the gold miners, and it was in silver. Silver up 5.5% just on the tails of the miners. They hit the highs the same exact day. This ETF hit nearly $38 on a 73 RSI, overbought, and today down 1.1%. Is the forecast basically the same in the future, as I just said, for GDX? Basically, yeah, the market obviously changes in terms of the number, but I would wait this out for about 2-ish weeks, and I would try and get an entry right around 35 to 35.5 with a target of about 37. So I would sit this out. Also, a nice rejection here. Tried to get to 37, basically 65 yesterday. Tall wick there, and then a negative day the next day. I just think I'm not shocked at all if it gets a 35 handle, and then you should get aggressive. But silver, the metals, all looking super, super good. All right, top 3 losers the past 5 days. We said the bloom will come off the rose in Ethereum sometime, somehow. It's a gorilla. What's going to take it down? And it's an absolute stallion. Something will. This has had the worst week of any ETF, down 7%. Today, down 4 2/3%. It is starting to be. So we had said that. Actually, I'm looking at the comments. It was August. Boopity boop. Boopity boop. I had said it before the high. So the market obviously never has to listen to what I have to say. And right here, so it was on the 15th. The VWAP that day was $34. And I said I would wait for this to pull into about $30. It got to $31 2 days later. And then what does it do? New all-time highs to 36, and now here we are again at 32.5. I think it's basing. I think it's doing a good job with the overall market digestion. I think that's going to happen. I love your risk reward here with entries under $32 even 32 quarter, under 32 quarter, which is your 20-day moving average. Which you can see the relationship, how this has rarely bucked that. Going back to July 4. I just like the momentum it has. Also, obviously, after you own Bitcoin, we'll talk about the year-over-year leaders. We actually have a new number 1 on the charts. I feel like it's Carson Daly, TRL, but for total chart request live, which I think is a show on some network. But yeah, still over 50 RSI since America's birthday, since it got above its 200 moving average. Just all the reasons in the world to own Ethereum since July, and specifically for this ETF. Since $20, just multiple series. And like I said, I'm telling you about setups. I hadn't seen a ton. A lot of stuff said wait for 2 weeks. Right here, get in. This thing has a 32 handle. Say it trades ugly tonight, or ideally for you, if you want to get long tomorrow. If this thing trades 32 quarter, I think it's solid to pull the trigger. And then I do think your target is $36 to $37, truly about 36.5. So a move, like I said, 32 to 36, $4. Massive moves, obviously, if you do it through options or if you play it through Coinbase Direct. But Ethereum, the worst week. So of any ETF, does the momentum continue? Likely to your benefit is what I'm saying. And then you pounce. Number 2 worst week. Try to keep it correlated, but it's kind of hard. BITO down 6.5%. This one, like I said, is crazy because the 60% dividend. So people are in this for correlation and to get paid. But even right here, I like this trying to base. We talked about this a couple of days ago. If it tries to put it in this bottom around 1880, I know we're like nitpicking. Gets really, really close, but it's an important level for BITO. I like it. I think it's going to go. There's better ways to play Bitcoin. I'm a huge proponent of IBIT. I don't like strategy. I don't like BITO. If you're going to get exposure, I would do it through IBIT. This thing, this BITO will very likely rally, as we're seeing, like we talked about with on Spaces the other day with the All-Star Charts guys, a dip and rip for crypto. So I think this looks headed to go to about 20.5. The thing that's concerning to me is when you have crypto on the heels of all-time highs and this proxy not hitting 200-day moving average, go to another bar, go to another store. It's not. There's something better. BITO, second worst week of all of ETF land. Number 1, Ethereum through ETHA. Number 2, BITO. If you're in those two, you've been taking a licking this week relatively. And then number 3, I had to zoom in all the way down to just 2.5% loss. So really 6.5% for the crypto guys. And then the SMH, but it's the all ever important, almost a quarterback of the market. Although there's such been, great rotation underneath with the financials and communications, I'm almost starting to take that back. But a lot of things run on semis, especially if we have this AI boom and this flywheel tailwinds, core competency. I'm going to spit out more synergy buzzwords. Flight. All right. SMH. Yeah. So again, we were talking about this. I'm not gonna really hammer this because we talked about it before, but I do think the new range on this is probably 302 and 282, and this pings and pongs over back and forth as we rotate into other parts of the market, and it holds its head above water with a super high, almost all-time high historic valuation, and that's good enough for Mr. Market. So here, I love the absolute risk. If you can get in at about 284, absolutely love that. I don't think you'll regret that because it's the bottom of the range. I don't think it breaks through to the bottom side. Some ugly RSI trading. I will say that 50 RSI is not the floor. Now it looks like it's kind of like the ceiling. It reminds me of almost me swimming. I went swimming a year ago. But it's almost like you see these waves and you're getting taken out by less, and you're almost just trying to reach and tread water. I don't love to see that here. But I do think it has more to go. I do think it bases here and it carves a floor again at the 282 level, the same way it's been doing essentially since July 7th. And it's likely to hug 290, which is where we are today. And then the target for me is probably right around 300, where the prior all-time highs were is 303. I think that's your target. I do think it's going to be a little bit frustrating, but I do think they get there in about 2 to 3 weeks by the end of the month. SMA to the third nastiest ETF after Ethereum and Bitcoin, down 2.5%. But it's 5 days, and everyone, including your grandmother, has exposure. All right, before we wrap up, the top 3 trades of the past 5 days. If you were long nat gas, short Ethereum through ETHA, and long GDXJ, congratulations. You're absolutely crushing the market, 6% minimum apiece on all those absolute return moves, and that's exactly how you trade. Now, we have not said this in a long time. There is a new year-over-year winner in returns. It is by 1%, so we are, nitpicking, but that's what we do here. It's very impressive. It is not IBIT. For the first time in many, many, many months, I'd have to look at when the last time this happened, but it's game day, and I'm not. But it's for very many, many months, for sure since 2024, your new leader year-over-year in returns are the gold miner juniors, up 90% off of the heels of the 52-week high yesterday at $84. We just talked about the setup, so I'm not going to belabor the point on that. But we're talking about it because it's the year-over-year leader. Again, this thing last September, $43, and it went back there New Year's Eve. It went back to actually $42. And then just an absolute crazy ascent. Even when we had the SPY US 52-week lows, this thing never even it got close to a 200-day moving average, but it didn't touch it. Last time it did that was January 27th. And just a beautiful ascent. This thing is, like, to me, and the chart here is overbought. It doesn't really stay overbought for a long, long time. And the stochastic momentum mix is just flying here. This thing is an absolute superstar. It probably has to level off after hitting such strides. But I do think you get an invitation to get into the year-over-year winner, a September 24 to September 25 story. Obviously a winner in 2025. I don't pay attention to that year-to-date stuff in February because it's 6 weeks of data, 8 weeks of data. Who cares? I can do a year-over-year time frame, and I know it's a superstar. It's like Saquon. Sometimes it's just where you are. He was with the Giants, for goodness sakes, and look what we did to him. Yeah. So anyways, with this, I'm really eagled out today, obviously. So wait for your invitation, in my opinion, for this to $76 in about 2-ish weeks, and then jump all on it. Absolutely incredible. GDXJ, your year-over-year leader, 90%. Right on the heels. It probably changes tonight or tomorrow, rather, is IBIT at 89%. I've been telling you, allocate to actual gold, through the form of the gold miner juniors. And just for you, nitpickers, the GDX, obviously more liquid. The returns are just a tad behind. So we go for alpha here is the name of the game. So GDXJ was the leader, and that's why we're looking at it. IBIT, Digital gold also deserves a spot in your portfolio. There's some things. So this has had some ugly closes, I will say. I just touted it. I just talked about it, and really, I put out a huge signal August 5th, and I said get in at 65 with a target of 70. So right here it's 65, and then it gets to 70 August 13th, and then what happened? It goes all the way to 62 essentially, and now here we are again. So it's had ugly closes. I don't like some of the candles here from what you want to see from a winner, and that's what translates into this struggle with getting to 50 RSI. So it's hard to be uber bullish when it's at a 44 RSI. But as you can see, the stochastic momentum mix starting to rally up in terms of volatility relative to itself. This is a very similar environment where it was here. It still troughed for a while back in March. It still had another month of nothing. So like I said, dip and rip is what it looks like here. But I still think it's setting up. And in terms of risk levels, again, this is the number 2 year-over-year leader. Give it respect. This is like Saquon last year when he dropped the ball in week 3 and everyone said, oh, you guys can have him. He like redefined the position. So I'll let you have one drop. That's, IBIT having, basically this consolidation from August 13th. Okay. It's a drop. And I think the only thing with this chart as well here is I want to see bullishness out of it in the next 2-ish to 3 weeks. I want to see it clear $65. I want to see how it does it because it'll translate into the technicals here of how it appears and how it endures, and if it has lasting long legs or not. So again, rising 200-day moving average hasn't even flirted with it since mid-April. It's back at $57. Nice to see the floor at $61. Need to see it clear $65. And I do think, all that being said, I'm bullish. We're very bullish the markets. XLC all-time highs. You're seeing risk on. I still think crypto and IBIT does in the form of this. I don't love this chart right here. It looks like it definitely wants to stay bound between 69 and 61 for a while longer. But the thing's a superstar. I give Steph Curry credit forgiveness when he has a bad series. It's okay. He's a human being. And IBIT is not a human being, but human beings invest in it. Also a lot of bots. But I do think this heads to, long way of saying it, I do think this heads to about $69 in about 2 to 3 weeks. And that is essentially very close to all-time highs. It looks like it's going to get very, very close to it. Like the all-time high is 69.89. I think it's going to get very, very, very close. Maybe 69.30 it is a meaningful level for now. And I don't love, again, the moving average has been moving wayward. Right after these highs were put in on August 13th, you had that gross divergence here. Again, the RSI, not even 66. When that happened, we said, the thing pierced $70 essentially that day, 69.89. We said, look out. This thing looks like it's going to go to very reasonably. It's not a huge call, but $66. And then boom, it actually gets to 62. All that being said, love the risk reward levels under 64. I think it'll work for you. Okay, so right here tomorrow morning, I still think you can get in. It might make you suffer, as IBIT usually does, but what do they say? Diamond hands. So, and then the next one, your third year-over-year leader. As we wrap up, some folks can't invest in crypto. Their family office, there's a 140-year-old grandmother who's just glued to the TV watching Saquon and Jalen, and it makes sense. So how do they invest? They go through Cathie Wood's basket. ARK. It's very correlated, and through a different way of doing it through Tesla. And really, here's the chart of the fund. It peaked July 21st at $79. And here we are. ARK, also the best performing ETF during Trump presidency, #1. Something I always just point back to. And I just look at this chart, great good looking chart. And it's absolutely risk on, as Cathie Wood. I like this. It looks like it wants to digest a little bit longer to me. I don't think it's ready to break out here. I'm seeing, like a wedge here. I think it's going to be stuck a little bit longer, and that's fine. And then I want to see probably an entry at about $73, I think, is minimal risk. And then I think upside targets probably happen towards the end of the month to about $78. So bullish these. I like these year-over-year leaders. Just wait for your setups. And as I said, enjoy your Eagles tonight. Go Birds, EAGLES Eagles, and go market. We'll see if we get new all-time highs tomorrow and all that and everything else. We will see you later, and peace. Go Birds.